We finally decided to do it. We purchased our first single family investment property. And then from there, 6 months later, I partnered with a few other partners that I'm a part of a community in, and we purchased a 62 unit in Tennessee. 5 months later, we syndicated a 41 unit. So we're up to 103 units.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have John Fortes. John is a full-time real estate investor and syndicator based out in Boston, Massachusetts. He is the co-founder of Community First Investment Group. And we're welcome to have him to the show. How are you doing today, John?
Hey, Dwayne, how you doing? I'm excited to be here, and thank you for having me.
Yeah, I really appreciate it. Yeah, we kind of talked a little bit pre-show, kind of a little about your background. Very interesting. You have a lot of synergies. But for the audience who are not familiar with you, would you mind going just a little bit about your backstory? How'd you get started in real estate?
Sure. It started about 5 years ago. So I projected out my 401k and turned to my wife and said, honey, we're not going to make it to retirement. So I didn't want to work till I dropped dead. So I started exploring. I explored the stock game. I came across real estate, but every time I looked into something else, it kind of always came back to real estate. So I educated myself, took about 3 years, did some personal development, read the Bible. That was the first thing I did. I went through the Bible, and I really found myself. And then from there, we finally decided to do it. We purchased our first single family investment property. And then from there, 6 months later, I partnered with a few other partners that I'm a part of a community in, and we purchased a 62 unit in Tennessee. 5 months later, we syndicated a 41 unit. So we're up to 103 units.
Wow. I kind of like that transition there. You kind of went and say, you know what, realize your situation, get grounded, and then kind of take action. And then you kind of put the pieces together to kind of move up and when I say a pretty rapidly fashion. Did you kind of get in you had mentioned you had got, some education. Did you guys go to any seminars or hook up with any mentors or coaches to kind of help bridge the gap for moving from single family up to, larger multifamily deals?
So I read a lot of books. I believe 1 year I read about 70 books, and most of them were real estate focused. So from there, Bigger Pockets, I was on Bigger Pockets. That really, really helped accelerate my learning curve. But what really did it for me was Jake and Gino. We purchased their educational platform, right? So it was all online based, and you go at it at your own pace. Right, and a lot of these guys do that type of education, right? So I didn't personally get a mentor, but I see the value in one. I learn by doing, and if you put a timeline on me, I put a timeline on myself, and I try to beat that projection. So I motivate myself. It's not like I need an accountability partner or I am not opposed to a mentor, but I love the thought of having one. If it happens naturally, it happens. But I never needed one. I kind of went in and did it and learned. I accelerated by learning, by trying to answer questions. So what it was is I was a part of a Facebook community. And if someone asked a question, I would answer the question and say, this is what I learned, this is what I learned, this is what I learned. And slowly that evolved from this is what we do, this is what we do, this is what we do. So the transition kind of naturally happened as I started, educating myself and then learn by doing. So
yeah, I like that a lot. Yeah, especially where you were actually answering questions based off, so it kind of like ingrains that knowledge into you, and it's kind of like a little bit of accountability that you're telling people to do this, and now you're kind of advancing, so you can be able to give that, that information to others and help others along the way. So it's kind of like a twofold thing. I like that a
Absolutely.
lot.
What really my focus was, it was kind of like selfish, right? Because of the fact that if I answer it correctly, or if I'm the first one to answer and I'm wrong, the person that comes behind me is going to clean it up, right? So I'm gonna learn regardless, and I'm not scared to put myself out there. I'm not scared to be wrong. I just want the right information. So my wife asked me recently, "What motivates you?" I said, It's the thirst of knowing the right answer. It's that hunger that fuels me. So if I don't know the answer, I'll know the answer by the end of the day. Like that's what drives me. So that's how I
Mm.
got here.
Was that something that it was kind of always with you along the way as you grew up into your career getting into real estate, or is that something that kind of, as you kind of started educating yourself, getting more confidence, that it kind of bubbled from there?
It's always been in me, but with things I love. Like I wasn't a big reader growing up, and it was because I wasn't around books. So where I grew up, there wasn't a lot of access to this book or whatever. Yes, I could have went to the library, but I didn't put that on myself. It wasn't. I focused more on other things, active things. But once I ingrained myself, for instance, it's like this: we spend a lot of time researching to go buy a TV, right? Because we're interested in having the best specs, this, that, and when we go and buy it, we know everything about it. You just want them to show you what to compare it to, right? So from there, what I do is when I want to learn something like real estate, if I want, like when wanted to learn about syndication, I'm obsessed with it. So I throw myself in it and I'm consumed with it. So I'm still learning, but I know pretty much a good amount. I would say that when I have other conversations with investors, they're pretty surprised at how much I know about the game.
Mm. Yeah, you kind of have the same characteristics when I interview some very, very successful investors that, when they went through their process, they really just threw this. So they kind of just got like obsessed with it, because it's like once they kind of like, start learning about it, get a little more confidence, they're like, I want to know more and more and more until I know all the answers. And then it just transitions over to action. So yeah, hats off to you and your success moving forward. Kind of let's move over to your investment criteria. You told us about a couple deals that you guys have currently. Where are those deals located, and can you tell us how those deals kind of started?
So the 62 unit is in Johnson City, Tennessee. I've spoke about this on other podcasts, and it's a heavy, heavy value add play. That's my favorite deal to talk about because it's currently right now a dead asset, meaning it's not producing any income. When we took it over, it was month by month. It was, I believe, about 70% occupancy. And we sent a notice to building one. We need you guys out by X date so we can start renovating. The decks weren't brought up to code. So we needed to really bring up the decks. So that was $100,000 to do the decks alone, right? And we all budgeted for that. But the only thing we did not budget for was, and this is a tip, if you have month-to-month leases, budget for a mass exodus. So what I mean by that is building 2 and 3, everybody moved out. Well,
Wow.
what happened was it allows us to kind of streamline the process now a little bit faster, work faster at our pace now instead of kind of staggering them. Um, so that kind of shifted plans for us. We've had 2 capital calls, but we're all on the same page and we want success of the asset. Building 1 should be online with tenants or starting to fill with tenants by the end of this month. So we're excited, and by the end of June, I believe, right? So we're in June. I don't know when this will air, so I want people to kind of have an expectation of timeline, right? So from there, now then we get to move into building 2 and 3, and we have a plan on which building we're going to target next because we want to save the building with the most 2 bedrooms in it for last because it's faster to work through the buildings with 1 bedroom. So that's our game plan. And, once we get building 2 up, we'll be breaking even. And that'll be basically where we were in the beginning before the mass exodus. So, you know, pro tip, plan for the mass exodus if you're on monthly leases, right?
Yeah, good to know. How did you find this deal?
Oh, a great question. A partner found it, and we're part of the same community, right? So when you're active in a community, people find you and opportunities find you. And it's going to be on you to either decide if you're going to go in or not. So in this business, nobody does it alone. And there's a lot of people that kind of venture off and try to do it on alone, but they realize that, you know what, I can't take down the building that I want to take down because I don't have the assets, the liquidity, the net worth, everything that you would need for signing on a loan. So you're gonna need a KP, you're gonna need investors, you're gonna need partners. So a lot of people don't take that into account because we want to go bigger, and you know that the shift is there where should I go multifamily or should I go single family? Everybody tells you go bigger because you're eventually gonna go there. So to get there, you have to partner up.
Mm. What for the Tennessee, because it happened to be like a really booming market.
Mhm.
Is any like that guy just brought you the deal that just say, hey, it just happened to be in Tennessee, or you guys were kind of actively looking in particular markets like that?
Great question. Our main focus at the time it was and still is Florida, Central Florida and above. From there, we know the Tennessee market because a lot of our community is active in the Tennessee market, right? So we're aware of it. But when you have partners that actually bring you something and you're just looking around, I don't understand why I would keep my money on the sideline trying to find my deal. Where if someone comes to me with an opportunity on a JV opportunity, I can actively invest that and make my capital work for me. The numbers after we stabilize on that one are a 17% cash on cash return. So I would be kicking myself if I knew of the deal and I didn't participate. And even though there's all these hardships going on with it, but that's part of the business. You have to be able to get through that. And if you can't go through it, you're gonna go through it. If you can't go through it with them, you're gonna go through it by yourself. And it's better to go together
Mm-hmm.
because you're gonna be even more you're gonna experience more gratification at the end of the day because now you can go and celebrate and say, guys, we did it.
Exactly. What are you guys kind of the business model? Is it kind of stick around that 50-ish model, or are you just going to be kind of moving up from there, maybe go up to 100 plus units?
Because I focus on investor relations, I have a lot of connections where people have capital and they want to move it into something. And they have the same vision as I do, where I don't want to keep my money on the sideline because of the simple fact that I'm trying to, in the hopes of me finding my deal. And we all know it takes a long time to find a deal. So I work with a bunch of operators where they might come to me and say, John, can Community First help us here because I know you're well versed in syndication. I say, absolutely. I have a pool of investors that are willing to put their capital in something. So we vet the deal, we vet the location. Our team did go out and explore the property, the Chattanooga 41 unit. We have boots on the ground as part of our team. So we have everything that makes it comfortable for us. And if we're comfortable in investing in an opportunity, our investors are comfortable because we're not going to just jump into anything.
Mm-hmm. You had mentioned that you kind of working as a team. You had mentioned investor relations. You say you have some other partners, and do they have specific roles, and are everybody's kind of like hands in the pot and kind of making stuff happen?
Absolutely. So my company, we have my partner's Matt. Matt is a full-time property inspection for residential and multifamily. He actually just went and inspected a deal in Tallahassee by mutual friends of ours in the community. It's not our deal, but he's just inspecting that. It's a 200 and something unit, I believe, right? Or it could be 150, I don't know. But he's expecting properties like that, so he knows exactly what to look for. He's a whiz on all of that. He's awesome. So he's seen it all as well, and he's also a volunteer fireman as well in his hometown. So he's just a great guy. My other partner, Mitch, he's got his accountant degree and his master's in taxation. So we get a double whammy with him. We cost segregated the 62 unit, and then he helped us, walk through all of our K1s and stuff like that. And personally, he does my taxes, so he's awesome. And then another thing with him is he underwrites all of our deals. So if we get another deal from, whether we're underwriting our own deals or we're underwriting a deal that we're partnering on, he'll oversee it. And of course, we all know what to look for, but he gets real deep into it, and then he could tell us if he's comfortable or not, and then we can always look it over and discuss it together. We do have monthly calls with each other, and we do talk every day via group chat, so we stay well connected.
Yeah, I like that you kind of put together a team that kind of everyone has like that role that just fits perfectly in this specific business. You got the numbers guy, you got a person who can look at the deals, you do a cost segregation. I mean, yeah, you guys got everything covered there.
Yeah, it's pretty awesome, man.
So as far as like networking, you had mentioned that you guys work with a lot of investors. Are you guys running like meetups, or you just kind of like just was really deeply connected beforehand, or like kind of give us some tips there?
So my partner Matt hosts a meetup in Florida. He's based out of Florida. Me and Mitch are based out of the Boston area. So Matt hosts his own meetup. Me and Mitch attend a local multifamily meetup out here in Boston. I'm flirting with the idea of creating one around my way, south of Boston, because everything is fix and flip. No one's focused on multifamily. So it's a great opportunity for me right there. But my time is of the essence. So everything I work on looking for opportunities. I invest my time looking for opportunities to free up my investors' time. So if that makes sense. So I'm trying to look for opportunities for them to get passive returns so they can free up their time to live a more fruitful life. So yeah, we do attend conferences. We'll be at the Ultimate Partnership Conference. We'll be at the Michael Blank Conference. And I have my ticket for the Jake and Gino conference, but I have a wedding that weekend, so I'm not gonna make it.
Yeah, that's good tough.
Yeah.
So you guys have a lot of success. You've done, a couple deals now, looking at some larger stuff, kind of like, have the team in place, have all the elements in place. So I know you kind of learned some stuff along the way. Is there kind of some tips you can let our listeners know that you could have avoided, maybe done differently next go around that will be beneficial to our listeners?
Yeah, if you don't fully immerse yourself, I would say invest after you thoroughly vet the operator. Invest in someone else's deal. That way you get paid by learning, right? And then go to conferences, go to meetups, educate yourself, join bigger pockets. Also, the tip that I gave earlier, if you're working with something with monthly leases, make sure you account for a mass exodus, because it's very rare. It could happen. Word spreads, tenants talk to each other, they know each other, they're a community, and they're going to say, all right, well, we got this letter and they want us out. I think that's going to happen to you soon. And it makes sense. And, we get it. Our goal was to take the tenants from building 2 and shift them over to building 3, but maybe we should have sent a letter on that prior, you know what I mean?
Mm-hmm.
And that would make things easier. So, it's all about communication. And that's something that we learned as well. Communicate. Because the clearer you can be, the better you will be.
Yeah, good tips. I like that. You had mentioned the word community a lot. And I was just thinking about for your name, was that kind of what inspired you to come up with your company name?
Yeah, community first is we're all about the community, and we want to create safe, clean living situations for all of our tenants, right? And our investors take pride in that because they know that they're contributing to a community, and they're contributing to an asset that they can take pride in. So, yeah, that means a lot to us.
What's kind of like a typical day when you're not working on the business? I know we talked a little bit off camera about your refereeing and some other hobbies that you do as well that you're passionate about.
So I'm passionate about one thing I'm really passionate about is my family, and my wife allows me the time to be able to go and and allocate towards the business. And sometimes that's going away. For instance, I believe July, I am away almost every weekend for conferences, multifamily conferences, and referee camps for basketball. So I immerse myself in everything I do, and that's to improve on everything I do. So I don't go to conferences to raise capital. I go to conferences to learn from other people that are at a higher level of where I am and seeing what I can scale and implement into my business plan. If I walk away with a couple investors, that's just a plus on top of it. I'm not there to gather as many business cards as possible, and you see people do that, and I'm not knocking them for that. That's their their choice, but I'm looking to educate myself because I would be nowhere without education.
Yeah, I like your approach. You're constantly looking at educating. Is there any kind of books you can recommend to our audience to pick up, maybe to get started? I know that you took many paths, and engulfed yourselves in it, but is there a couple that come to your mind?
Well, my favorite book that's not real estate related is called The Third Door by Alex Banayan. It's about how do you use all right, so there's three situations, right? There's the waiting in line. If you're going to a club, you're waiting in line, right? And then there's the VIP line, right? All of us are either going to wait in line or we have VIP access. Now, the third way in is going through the back door, jumping through the window, going through the kitchen, and now you're inside the club, right? So that's the third door. I'm always trying to figure out how I can position myself to avoid those two and kind of creatively create another avenue to go. So if there's a fork in the road, I'm trying to go straight.
I like that a lot. And do you have any special or particular morning routines that you do?
10-minute morning meditation, and then I go work out. So it provides a lot of clarity for me, just 10 minutes, just to kind of I owe myself at least 10 minutes a day, right? I don't do more than that. Sometimes I do though, actually, sometimes I do when I get caught up in it and I let it naturally take me. And then working out really, really allows my creativity to come out because now I have cleared my mind, and working out really kind of just lets me just focus on running or lifting weights or whatever, staying in shape. So yeah, it really does a lot for me.
Yeah, just kind of quick personal question there. So are you an MBA or more college guy? I know that you're doing refereeing more for the college, but I'm just curious on which side you go on.
Hey man, the goal is at the end of the day is to do TV games. If NBA comes calling, college comes calling, whatever happens. I just let God take over.
Nice. So what are you most grateful for?
My family. My wife allows me to do everything. So my wife and my kids, they're the reason why I do it, and they allow me to go and what I like to say is they allow me to leave the house in the morning to go hunt for food and come home and provide it for them. So I'm very, very grateful for that.
Yeah, I love that. So for potential JVs, partners, investors, how do we get in touch with you?
You can reach me at cfigwealth.com or john@cfigwealth.com. I'd be happy to talk to anybody because I love this stuff, man.
Yeah, I really appreciate it. John, thank you so much. Really appreciate talking to you. Like I said, we got a lot of good tips. I like the informing for the mass exodus. That's a big tip. I haven't heard that one before. So that's good. We're going to make sure I have that into the show notes. We'll put your contact information there. It just seemed like you just love kind of giving back, sharing that information so everybody kind of rise up together. So John, thank you. Blessed to have you on the show, and I look forward to connect with you again soon.
Hey, Dwaine, thank you. I'm actually grateful for you having me on, man. Thank you. I wanted to put that out there.
I appreciate it. Thank you so much. Have a great one.
You too.
Bye-bye.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.